Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about the highest paying annuities right now. Okay, so there's a lot of different types of annuities, and I'm going to attempt to go over all of them, and I'm going to show you the highest payouts. And we're going to start with the income rider first, which gives you the highest annual lifetime income, and then gives you the most flexibility. I'm also going to show you the SPIAs and the DIAs, and I'm going to show you the MYGAs. The SPIAs and DIAs just give you straight annuitized payouts for a certain period or for maybe a single or a joint life. And then the MYGAs are like CDs. They just give you the highest, if you're looking for the highest rates, I'll show them to you. So, and if you just want to check out my calculators, go to my website, johnstevenson.com, and you will see what's available right there in your state, whether it's a single or a joint payout, if you're looking for income, and it'll show you all the companies. So, and then if you want to reach out to me and you want my help purchasing one of these annuities, I'd love to help you. So anyways, I like to show everything. I like to be super transparent because a lot of times it's easy to kind of show one or two options that pay you the most. As an advisor, you can get higher commissions from certain companies versus others, certain products versus others. But it's a lot more, it's just better to be transparent and show everything. So anyways, that's what I'm going to do right now. And hopefully this is helpful to you. All right. So sharing my screen, and this is based off of a client living in South Carolina. They are 60 years old and they are married, and their spouse is 59. Okay. And they got $500,000 they're putting into an annuity contract. Now, here are the highest payouts for an immediate, and I'll show you everything thereafter if you decide to defer it. All right. So $500,000 for this client, they're going to give you $32,000 a year guaranteed for the rest of their life. That's with Prudential. Okay. It might be different in your state or whenever you see this video and you look it up, but this is what it is. Now, this is not taking into account some of the higher payouts that you can get that are temporary. So a lot of times you can get some accelerated payouts from NASA, Emeritus, American General Life. Sometimes those will show up on my income rider calculators when you look it up. So keep that in mind. A lot of times you will see those pop up, and they are for a time. Okay, I'll just show you right now. I could just show you instead of talking about it. All right, so I'll just click this box, no income reduction. There you go. So here's one in this instance. So let me show you more. I'm gonna push this out a little bit more. Let's say you defer it for 65. A lot of people will do this and they're like, all right, I'm gonna buy this early, and then I'm gonna take this later because I'm gonna start Medicare and maybe start Social Security at that age. Okay, so it's a good way to do it, and you get more income. So if you do that, you can see these accelerated ones. 54 grand, yeah, pretty good. But then it reduces to 33 grand for the rest of your life. This is good for certain scenarios. Bridging an income gap, maybe you're waiting to take Social Security, that can be good for that. Okay, but for most of us, that's not what we want. We don't want something that reduces, but maybe you do. So you can see it gives you more income for 10 years on this one, and then it reduces quite a bit after that. So sometimes people buy this for the go-go years as well, just so they can spend more in the early years. But if you're looking for something that never reduces, then I'm just going to click this button. And that's why I just warn people when they go to my website, when they check this, it has no filters. It's going to show you everything. All right, so if I scroll down, now I can see, okay, here's the ones that never reduce. And for this instance, Corebridge is the best. This is best for a married couple, and they wait 5 years. From 500 grand, they're going to get $49,000 a year for the rest of their life. So I can pull this up, and I'll show you how this works. So they're giving you, So benefit base grows to $712,000. That's contractual, that's guaranteed. And then it's multiplied by a withdrawal rate of 6.95%, giving you $49,519. If you take it in 4 years, it's 45 grand. If you take it in 3 years, it's 41. In 2 years, 38. 1 year, it's 34. And then you already saw what the payouts were for immediate. So that's how that works. And you notice that the account balance, even with index growth here, will run out by the time you're 75. But that income continues for the rest of your life, which is why you get it. Okay, on the guaranteed side, they show you, well, if this earns nothing, then this just runs out a little bit faster, your account balance. Your death benefit here, though, that will last for as long as the money is in there. So just keep that in mind, that if you die early, your beneficiaries will get your money. Okay, so now that we looked at that, let me go back here. And if you are looking for the highest MYGA, and just one more thing on the income riders, they're super flexible. You can buy them with the plan to take them at 65, but you might take it earlier, and that's fine. You can take it at 66 or 67, then it's more. Okay. it doesn't matter how long, you keep it. It matters that it's contractual and it's guaranteed. You can see all these keep rising. Okay. If you go up a little bit more, if you wait longer, you wait till 67. See here, the benefit base. Originally, we were looking at 65 at 712, it grows to 797. And you got a higher withdrawal rate and higher income. Instead of 49, it's 57. Okay. And these work just because the income rider that you're buying is doing an 8.5% roll-up rate. That's why this works. Okay. So you got the roll-up rate, and every one of these are different. They give you different roll-up rates, different withdrawal rates, but in the end, it's all about the income. Okay. So if you're looking for highest income, just keep it simple and go with the highest one. So, all right. So now that we saw that, we're going to go to MYGAs. MYGAs are just like CDs, multi-year guaranteed annuities. If you want the best ones, I would say choose either the 5, 7, or 10-year options. Those usually pay out the most. So if I go down, let's see the 5-year. So 5-year, this is A or higher. What if I do any rating? What does that look like? See, there you go, 6.3. See? So if you want that to grow, this one does not allow withdrawals. So if you want to have one with withdrawals, then you get 6.15 instead of this. But let's say we just want to park it. Okay? We want the highest growth for 5 years. Well, pretty good. Grows to 678,000. Start with $500,000, and you can pull this out, roll it into something else. If it's non-qualified money, it still continues to grow tax deferred until you, of course, take out your earnings. So, yeah, MYGAs, they're awesome. So, highly recommend them. All right, so let's take a look at the SPIA calculator. So, SPIA, it's just the classic annuity. You put your money in there. The insurance company will never give it back to you. You cannot surrender it like you can a MYGA or an income rider. Those you can surrender and you can take the cash out. Okay. With these, you cannot. So if I was to get something, gives me lifetime income and I get a cash refund, my beneficiaries do if I don't use it all up, then the immediate payout, let's see what it is. It's $2,900. So it's less than the income rider, but people will get this for various reasons. They're like, all right, well, I will. I want a certain. No, I don't. I want single life, and I want a certain period of 30 years. So if something happens to me in 20 years, this payout will continue to one of my kids or whoever. That's nice. You can do that with this. You can't do it with an income rider. But the income is just not as high. So if you're looking for highest lifetime income, the income rider is still better. Anyways, again, go to my calculators on my website. You'll be able to play with those numbers yourself and see what's available. So one other plug here I want to go into is some people will reach out to me and they're like, I don't want income. I don't want fixed growth, but I do want market protection and I do want some of the index, right? Okay. So a MYGA does not give you index growth. It just gives you a fixed rate. It's very simple. It's boring. That's what it gives you. Okay. An income rider gives you a lifetime income and it's great. But in the middle of the road, if you just pick a fixed index annuity without an income rider, then you want to focus on growth. And of course, you're already getting market protection, but you want growth from the right index. Okay. Why do I stress this? Because there are a lot of indexes out there. Okay. And let's just see what this page pulls up. All right. So there's 3,600 options here. We're not going to go through all of them, but I want you to see this column here, right here. It's 10 years. Whenever you see something like that, it's because it's new. It's back tested. Okay, it hasn't been around for a long time. So I usually tell people steer clear from it. So, and they're trying new things. It doesn't mean it's not going to work, but it usually doesn't. It doesn't usually work the way they illustrate. So you got Bitcoin, and that's all over the place. And you got these thing that I've never even heard of. Media stats, multi-asset, like just new stuff. And this is just with Athene. And then there's more. Okay, there's more, right? And these are good products, but you feel like you realize you're the guinea pig on some of these. Okay. 1 year NASDAQ Bitcoin. That's not too bad. 8.21. That doesn't look too bad. Right. But it's with Exonic. They're a brand new company and they don't have a history that I can see that lets me know that they're not going to lower their participation rates quite a bit. And so when I'm looking at that, I usually will recommend a company like Delaware. And I'll do the S&P 500. So Delaware is one of a few companies that I will recommend because they have a reputation of keeping their rates constant. their participation, their cap rates, how much they allow you to take in the index. All right, so I'm going to go in here and I'll say S&P 500. And then I'm going to go up here and say, all right, what can I get? 55% is what they're offering. Look at this, 8.93. Wow, okay, I can bank on that. So I'll go in here and I'll say, okay. As long as they keep their participation rate at 55%, my account balance is going to grow like this. And in 10 years, it's going to be almost $1.2 million. I feel pretty confident with that. The only reason I feel confident with that is because I feel confident in Delaware. And the only reason I do is because Delaware has published their rates over the last 10 years and say, we can see over time, out of 70,000 policies, 88% of them have either renewed at or above what their past rate that they offered was. That's really important, because then when we're illustrating this, you can more or less look at this and say, okay, this is probably what it's going to do. Instead of getting something that someone else is showing you that's 200%, that probably will not happen. Okay, and so, or they'll give you a high teaser rate with the S&P 500, 80% participation rate, and then they'll lower it by half the year after. That's why you got to pick a carrier that is known to keep their rates high. And Delaware is one of those carriers. So anyways, that's just an example, but I wanted to show you the highest payouts depending on what you're looking for. Most people that reach out to me, they're either looking for growth or income. If you're looking for income, usually the income rider is the best. If you're looking for growth, then if you want fixed, there's some good MYGA options. If you want indexed, there's some good indexed options. You just have to pick the right strategy, the right index, and the right company. Okay. So I hope that helps. I'm here to help if you want an annuity. Okay. If you don't want one, don't book a call with me. But please use my website and then check out what's available, and at least you'll have that information at your fingertips. But if you do want my help, I'd love to help. There is a link below this video, goes to my calendar, and we'll get on a Zoom meeting. Otherwise, go to my website, check out the rates, and then book a call right there on my website. And we'll chat, and I'd love to help you. So anyways, not a huge sales pitch there, but yeah, if you do want some help, I'd love to help you. So anyways, hope this video helps. If you like it, make sure you click the like button, subscribe, share, comment below if you got questions. I'm happy to help, and we'll see you next time.